Have you ever made an annual plan? Do you know what you want to buy and sell in 2023? Do you know when you want to enter to the market? When you want to stay out of the market? When you want to stay cash, in fact? To answer these questions, you need to have annual plan. Expert traders usually are making their annual plan at the beginning of the year. If you didn't make it yet, it's not late. Make it now. In this video, we are going to see what we can buy or sell, or what we have to do, how we have to behave in 2023, and how we have to trade this year. So, at the beginning, the first priority, the first step in the annual plan is to learn about the central bank's meetings, because the central bank's policies usually affect everything. Federal Reserve meetings and the meetings time, and you need first of all at the beginning of the year make plan and find out in which date Federal Reserve will have a policy meeting. Policy meeting and interest rate decisions of U.S. Federal Reserve or U.S. Central Bank usually affect everything, affect all the markets, no matter if you are trading in the stock markets, cryptocurrencies, currencies, bonds, whatever you trade. Federal Reserve decision affect everything in the stock market, in the financial markets first, and also affect the other central banks' decisions. For example, ECB, European Central Bank, Bank of England, Bank of Japan, People Bank of China. All these banks usually they watch to Federal Reserve, and they're kind of trying to set their policies to not to be against of the Federal Reserve policies. So follow the Federal Reserve meeting, ECB meetings, BOE meetings, and Bank of Japan's meetings. These central banks meetings are very, very, very important. And first of all, at the beginning of every year, make sure that you know exactly when these banks are going to have a meeting. So based on these plans, for example, if you know, for example, Federal Reserve will have a meeting at the end of the February, the first, like at end of the January, like January 31st, for example, and February 1st. So you know these 2 days are very important. Days before them and days after them, how you have to play in the market, what you have to buy or what you have to sell. So this is the first step. The second step is to learn about the earnings calendar, especially if you are trading in the stock markets. Economic calendar is very important. Economic calendar are also important, but the earnings calendar is an annual plan. Gets more, gets more priority than economic calendar, especially if you're trading in the stock markets, trading indices, or trading in, the most important stocks. They are watching to earnings calendar. If you go to the earnings calendar, you can understand, for example, these stocks or these shares, they will have an earnings call in these days, in this time. So days before them or days after them, you need to, for example, if you want to buy the Tesla share, you better go and watch when Tesla is going to publish the earnings results. Then you are going to see them before them, so then you can better understand. You better to buy the stocks before earnings or after earnings. All these depend on earnings calendar, and in anything you want to do in the stock markets, the first thing you have to do is to go to the earnings calendar and watch them. When you know these two steps, there are things that in the calendar, and you can find out just like writing text, posts, websites, and stuff like that. But the third step is kind of economics. It's not. It's professional. It's something that you need to learn. It's not something that you can find it in a post on a calendars and weblogs, stuff like that, or websites that you go and follow them. Okay, what's this or what's that? You have to learn. You have to trade. You have to have an expert. So experience in the stock markets, or that doesn't matter in the financial markets. When you know in which cycle we are, then based on that cycle, you can understand. Okay, for example, we have the. For example, right now we are in a recovery. We had the recession just at 2020 to 2021. We had the recession. After the recession, the world started to recover, and now at 2023 we are in the last step of recovery when we are going to go to the normalized economy. The economy in the last steps of its recession. We ended the recession. Now we are trying to recover. We recovered somehow, In the last steps, we are in 2023, it's the last steps of recovery. So that's why I made it 2023 in two halves, first half and the second half. Because in the first half, we have something different. In the second half, you're waiting for something different. So if you know this, then it can help you better to make a better decisions. In the last stage of recovery, it means that we usually, when we have a recession and we're coming to the recovery, usually the economy is like that. We have a very good recovery, fast growing, and this fast growing brings some results like inflation and blah blah blah, different results. To come over these problems that comes in during the recovery, we will fall into another recession, which is not the recession in fact, which is in fact in a more detail we can call it the recovery path. But we have a second recession before ending the recession and coming out from the recovery, which can be soft landing. It is usually the soft landing recession before ending all the recession effect and come over all these effects and go to normalized economy. We face usually this. This is the economic cycle. So if we know that, and we know in 2023 we are in the last steps of recovery, we can understand that no matter what happened in the market, history says us that we will face with at least a soft landing. This is the standard growth path. This is a standard economic growth path. This is something that created in the years, hundreds of the years, and we cannot change it because this is how it's like growing of the people, growing the humans growing like this. Till 5 years we have some behaviors, from 5 to 10 it's a different, 10 until 20 it's different. For example, that's because this as example. Economy is also like that. When we face the recovery, when we face the recession and we're coming out from the recession, this is the step that we will fall. In this time, 2023, that's why if you look at the central bank's meetings, central bank's policies and decisions and the plans, you can see that in 2023, especially in the first half, usually they will try to continue their hawkish plans in the first half. And in the second half, they're trying to pause the hawkish plans and slowly go to less hawkish plans, or sometimes they may even have a dovish plans. For sure, there are different. We have different economies. We have different policies. Some countries do that. Some countries to come over these problems. But at the same time, in the first half, we have Bank of Japan and People's Bank of China that they have a different plan. They are still on dovish plans. So, Bank of Japan still supporting the economy. So they believe that in the first half of 2023, they believe that economy still need the support. So what the Federal Reserve, Bank of England and ECB did last year, they are still doing, and they continue their plan. Same as People's Bank of China. If we know that, so for example, we can understand why USD JPY is still uptrend at the beginning of the why we are still waiting for an uptrend for the USD JPY at the first half of 2023, and why we expect a downtrend in a USD JPY chart in the second half. Why, for example, why we believe, for example, that in Chinese stock markets, why we think that, for example, the Chinese stock markets should grow better in the first quarter and in the second quarter of 2023, why we expect some recession in the Chinese stock market in the third quarter, and why we believe in the fourth quarter they can grow better. If we, I'm not the God, the others also same, other analysts also same. We are not the God, we cannot read the mind of the people, but we can read the market. If we know the policies, if we know the central bank's policies, we can understand this is what what's usually should happen. So we will not get a surprise of what's happening in the market. So, understanding of the plan of central banks' plans will help us to understand the overall market conditions. So, make sure at the beginning of the year you go through all the central banks, read their economy, those countries' economic situation, and central banks' policies, because the central banks' policies usually move the markets, move the stock markets, currencies, and stuff like that. When we're talking about the hawkish and the dovish, what means hawkish? How hawkish decisions affect the market? If, for example, I'm giving the United States as an example, then you can, because most traders looking after Federal Reserve meetings and Federal Reserve decisions, so I'm giving the Federal Reserve and United States as an example, so you can go to another central banks, also the other central banks' decision, and follow almost the same rules. When you have a hawkish plans, it means the house price usually should increase, sales should be up. It means that safe havens like gold, like US dollar, they will have more demand. Why? Because same as more demand, and also bonds. Why they have a more demand? Because the bonds they pay off more. They give you more yield, higher rates. Central banks have to give you the more rates. It means that the bonds also will give you more yields. So higher yields will put the bonds in demand. And I'm talking about the safe havens. Why? Because the hawkish policies usually during the hawkish policies, and when the central banks having the hawkish policies, usually they have a pressure on the stock markets. So the people, they are taking their stock market, their money out from the stock market, so they are looking for any replacement. So safe havens, gold, dollar, I don't know, we have a different safe haven, depends on which country you are, but the traditional safe havens, gold and US dollar. So US dollar and safe haven gold, they will get higher demand, more demand when you have a hawkish plans. But what happens when you have a dovish plans? Dovish policies means that the governments, the central banks and the governments, they usually help to trying to support and help the economy. So it means that the energy demand should increase. So that's why at the first half of 2023, we are waiting the gas and oil price. We are waiting for lower prices for gas and oil, but in the second half, gas and oil prices should increase. Why? Because with the hawkish plan, with the dovish plans, economy will get heated. Then we will get more activities. We will have more activities in economy. We will have more activities in factories, and stuff like that. So that's why we need more energy. So when we need more energy for the factories they use the raw materials. So for raw materials, we should expect higher prices for raw materials and more demand for raw materials. While during the when we have a hawkish policies, it's exactly opposite side. Industrial materials or industrial metals, for example, like silver, when we have a dovish plans, when we have a dovish policies, the silver, copper, aluminium, and other industrial metals will get more demand. This is overall general market and how we expecting the stock markets and overall, not just in the stock markets, in the financial market in 2023. But don't forget, when we are talking about 2023, we need to know about the AI and blockchain. 2023 is the year of the new science, of the new technology, and artificial intelligence, or we call it AI at the short words, will get the more focus. So if you want to trade in 2023, don't forget to follow the AI stocks. The stocks there, the companies, the stocks or the stock or the shares that usually they are active in artificial intelligence and blockchains. Cryptocurrencies and blockchains also in 2023 will get more focus. Why? Because in several years, in the last years, blockchain got more involved in the blockchain industry, and the blockchain making playing the more rules in our businesses, in our life. So 2023, these two subjects will get more attention. So if you want to trade in 2023 based on these overall business plan, based on these overall financial market conditions, don't forget to follow the AI and blockchain. AI and blockchain can be the key invest of 2023. This is how we have to trade in 2023. If you want to trade, so follow these rules. Make sure you learned them. Make sure you understood them. If you have any question, write under the video. If you're watching this video on YouTube, write in the YouTube, under the YouTube video or Instagram or whatever you watch this video. Make sure we'll get back to you and we'll answer all your questions. All the best.